Hello everyone, this is Terry with Futures.io, and it's my pleasure to welcome back Peter Davies of Jigsaw Trading for today's webinar, introducing daytradr, a new standalone platform. If you have questions, please type them into the questions box throughout the event, and we'll do our best to answer them at the end. If you're watching us on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And without further delay, I will hand it over to Pete.
Okay, thanks, Terry. Just let me get the screen share done. Nice to be back on Futures.io. So hello to everybody here. And just give me 1 second to get the screen share done. Right, should all see my screen now. So if you can't, you better holler.
Looking good.
Okay. So first of all, let's just put up the disclaimer. You've all read this before. It is important. There is risk in trading. There's no magic beans here. I'm not going to read it for you, though. Just give you a few seconds to read that. Okay, so now we're going to talk about the product today, but before we go into the product features, I'm going to take a few minutes to kind of talk about the why in all of this. Why this set of features? What is it we're trying to achieve? What is it? What problems are we trying to solve? Now, a while back, I did a webinar where we took a poll, and before we did the webinar, we actually told people to register under an assumed name so we could actually encourage them to give honest answers in the poll. So we had about 270 traders taking part. Now, the webinar was something I did as a response to being contacted by, I think it was 3 traders all in the same month, and all 3 of them had put 20 years into trading and actually not got anywhere with it. So we did the poll. We found that more than half of the people polled had spent over 6 years trying to figure trading out. Yeah, overall, only 82%. Overall, 82% were not making money. So the fact that only 1 in 4 kept any sort of log of their trading is obviously part of the issue, and is one of the things we're trying to address. But the bottom line is people are spending a large portion of their lives on the effort to trade and not getting anywhere. In fact, they're not just not getting anywhere, they're not actually trading at all. So people I know in the industry, in the brokerage industry, are telling me that there's plenty of people opening new accounts right now, and actually sizable accounts, but they're not actually trading them, okay? And that's not a good thing for the industry. So, the whole industry is in for a bit of a shake-up if that doesn't change. Now, part of this is down to the kind of unregulated state of the industry. So you can literally go online and sell magic beans to traders, promise them that planting these beans in the garden will make them profitable, and there would be nothing illegal about it. So the educational industry, to an extent, is eating the retail trading industry alive. And you see some changes that are kind of reflecting this. So you can see that data providers that used to charge per transaction, they're now trying to find ways to charge per month. And that's because people aren't trading. You see the exchanges are upping data fees pretty much for the same reason. So what we see is traders have got wise to this kind of blowing up your account thing, which is good, but they're still hopping from one useless thing to another, because of that allure of all the magic beans for sale. So if you spend any time with prop traders, you'll see there's quite a difference between prop traders and retail traders, both in terms of how they trade, how they learn, how they stay relevant, and the tools they have at their disposal, and some of the environmental benefits they enjoy. So to fully appreciate what we're doing at Jigsaw and why a lot of traders are going to keep on failing, without doubt, let's just have a quick look at the learning process and what it actually means to learn how to trade. Now, I think it was Jim Dalton that first introduced traders to Abraham Maslow's 4 stages of learning. Now, I think this is really cool. Not sure I agree with stage 1 when it applies to trading, because I think most of us start trading knowing that we don't know anything, okay? But what it is, it's this last part that traders struggle with, they fight it, and they try to avoid it. And it's simply this: doesn't matter what you learn, it becomes automatic. So if it's driving, writing, playing tennis, martial arts, walking, languages, whatever you do, whatever you learn to do it unconsciously. It's you still doing these things, it's just the unconscious part of you. So you kind of have a built-in autopilot, and that's something that we rely on all of the time. In fact, our ability to do things consciously is actually quite limited. And now a good example of this is, if you're just sitting there wherever you are right now, you're in your office, you're at home, just think of a phone number and how you would actually tell somebody a phone number. Now, if you're human, you probably split the number into chunks. So for me, if I read out a phone number, it'll be like 0870-385-195. So that's 3 chunks of numbers, as opposed to just reading it out as one long string of 10 numbers. And that's just indicative of the way we split things into chunks as we bring them into conscious memory. And it's also the reason that we can't consciously process 50 incoming data points at one time. And it's a reason we need to keep trading fairly simple. So most of what we do unconsciously. We do it every day. You are doing it now as you process my words because you're understanding the English language without really thinking about it. But despite all the evidence of this in everything we do, traders do not want to use that gift of subconscious programming, okay? And that's why we have all these attempts to mechanize trading, to create real rigid entry rule sets to trade off, to basically set yourself up for failure by not treating trading like every other thing you ever learn. Now, part of what we do at Jigsaw is to recognize the fact that trading must become something we do without much thought. That we have to go through a learning process to get us there, and that all the magic beans in the world aren't going to help us. Now, I know there'll be people already here now that you're already starting to feel uncomfortable, right? Because this sounds a bit ethereal. It sounds like some kind of Californian hippie concept that you can actually develop trading as an unconscious skill. And so for those of you who think I'm being a bit too spiritual about this, just go over everything you did so far today and how much conscious thought you had to put into those tasks. Now, bear in mind that as you carry on your trading journey, and if you're trying to consciously make your trading journey something different from everything else you ever learned, that's going to give you a problem, okay? So we're going to just appreciate the fact that when we learn to trade, we're going to build some unconscious skills. And we'll bear that in mind as we go through and talk about the different areas of the product that we actually cover now. Because after working with a lot of prop firms and prop traders, we actually decided to expand the products to cover a number of different focus areas we never looked at before. Now, most traders are only interested in 1 or 2 of these things, and that actually holds them back. In fact, if you talk to a new trader, they are usually only interested in one thing, and that is always, where do I get into the market? So with the areas of focus, what we've got, the cornerstone is learning, partly in terms of what to learn and partly in terms of how to learn, how to make information stick into your head, how to develop that unconscious expertise. Now, you don't need to get your education from us, but anyone that buys our tools is given a path to learn how to read them, how to make reading the information automatic. Now, that comes free. And I think of it like buying a cabinet at IKEA, right? It'd be pretty useless. Anyway, for me anyway, it'd be pretty useless without instructions. So when you get the tools from us, you've got 2 choices. You can buy a new set of tools, you can turn it on and try and trade off it, okay? Which is basically skipping any learning curve at all. And we have people do that, and the results are usually quite disastrous. Or you can go through the drills we give you, so that you learn how to actually read and process the information. Doesn't take very long, and it's very much in line with the way professional firms teach. Now, tools, the next part, obviously, are essential for any trader. And the focus of our tools is to give you what you need to make a decision and nothing else, okay? And then once you've got what you need to make a decision, we then try and make that experience as pleasant as possible, making it fast, reliable, and user-friendly. So how do you decide, you're a tools developer, how do you decide what to include? Do you include 5,000 indicators? Well, we decide based on what prop firms use. So this slightly overweight gentleman here is me, stealing a seat on the desk of a prop trader. And what you see on this trader's desks are all the domes, some longer term trades, long-term charts, and some news. And that's it. Now, what you don't see is this. Now, I can't tell you how many times I've done screen shares with home traders and seen this sort of thing, and much worse. I've seen like 6 screens full of charts like this, hundreds of indicators, so much information, it would actually be impossible to make a decision. And of course, when people show you this screen, they're very, very proud of this setup. And you know, it's really difficult situation to tell a trader who's got this setup on 6 straight screens that it's just going to get in his way. It's like telling somebody their girlfriend's ugly. So people don't want to hear this. There's a lot of traders not ready to hear that this isn't where you're going to make money, because ultimately markets we trade can only go up or down. So you could flip a coin in the market and get it right half the time. Now I know that doesn't make trading easy, but this sort of thing just makes it harder. So if you speak to professional traders about this, they will tell you, you ask any professional trader, what's the secret of your success? And I would say 99% of them will tell you the biggest part of trading is getting out of a trade when you know you're wrong, right? That's kind of one of the biggest parts of the battle. So we basically built a platform on techniques that prop traders use, on tools that prop traders use, because they work. They work for prop traders, okay? And then we try to push the edge of those features as much as possible, because there's always going to be room for improvement. And as we meet more and more professional traders, you know, there's always going to be subtleties that we can learn from them and bring to the product to either help all traders, or quite often traders just focused on a specific technique. The next part we have is analytics, because when you're actually trading in the heat of the moment, it's not very easy to track what made you money and what didn't, okay? So you need to be able to crunch your trade data. For example, you might find out, which is very common, that you make lots of money in the first 2 hours of the market, but you give a lot of money back directly after lunchtime. Or you might find that one instrument is responsible for most of your profits and another for most of your losses. So decent trade analytics are essential to maximizing your trading edge. So you can actually do more of what works and less of what doesn't. The next thing we have is environment. This is a tough one to replicate, but professional traders, one of their edge is they're immersed every day in a trading environment. So they go to work, they see traders every day, they go to lunch with traders, they talk trading a lot. Now the benefit of that isn't so much they can just go to, you know, their fellow traders and say, where'd you get into the market? You know, when do you enter the market? It's more that being around traders kind of gives you insight into things that you probably wouldn't have asked about. So for example, you know, you might be a new trader, you might hear your colleagues, your older colleagues say, you know, complaining about that it's slow, or there's a spoofer messing around today, or, you know, talking about a specific activity they're seeing, because people like to kind of chew their fat and have a chat about what they're seeing when they're at work, and prop firms are no different in that respect. So being around traders is a really big advantage to anyone new. Now, while we can't put all of our customers in the same office, we can give them a place to communicate with each other during the trading day. So some of these seemingly intangible benefits can actually rub off on them. And then finally, there's accountability. Now with prop traders, there is an absolute performance requirement, right? You have to perform or you're out. You've got a manager to report to, you've got a manager that decides if you're ready to trade real money or not. And if you compare that to every trader at home, trader that's got no accountability to anyone except maybe their spouse, you know, they can trade a sim account, have a bad day, reset the sim account the next day and just kind of write it off, tell themselves they're not going to do it again, you know, until next time and the time after that. You can't do that in a prop firm, right? You're going to be in a meeting in your manager's office in a prop firm asking what's going on. So this accountability, it helps remove bad habits, even if it is something that's actually quite painful in the short term. So those are the areas of the product that we're actually trying to focus on. So what we do now, just go through one by one and tell you how we think we've managed to deliver functionality in each of those areas. So first, let's look at the trading platform. Now, most people know us for a set of products that plug in to various other trading platforms like NinjaTrader, Multicharts, OEC, etc. But now we've got a standalone platform called daytradr. Now, if you go to a prop firm, you'll generally see one of a handful of professional trading platforms, TT, CQG, Stellar, a few other platforms for options traders, because that is kind of quite specific platforms for stock traders. What you're not going to see are many of the trading platforms that retail traders are using. You will see Market Delta in some places. Now, there's a few reasons for this. First of all, Retail trading platforms are quite bloated with a lot of irrelevant stuff that is really there as bait for retail traders, and that kind of makes the platforms a little bit slow. Rightly or wrongly, a lot of the retail platforms are considered too unstable for a professional environment, and some of that is just really historically how they've performed in the past, and kind of it's just a reputation they've not been able to brush off. But mostly the retail platform providers really don't get what professional trading is all about, so they're just not as usable. In many respects, they kind of miss the point of what trading is. So with daytradr platform, we built a platform, targeted at professional traders. We made it truly multi-threaded, which means that the operating system can allocate resources to each part of the application individually, spreading the load across the entire PC, and that avoids bottlenecks that you get on many retail platforms, and that makes it very, very fast, and it's also very light on memory. And from the perspective of prop firms, right now it is not being treated as a retail trading application. Okay, it's got the functionality they need, it's got none of the magic bean stuff that they don't, and it has the stability and the performance profile that they expect. Now, in terms of connectivity, with daytradr, like many platforms, you can connect to multiple data sources at any time. So when you open a search window, it'll ask you which of the connected feeds you want to use for the data, and it will ask you which account you want to use, which can be obviously from a different feed. And it's also it'll also let you choose data from another platform. Okay, so let's say you have both NinjaTrader and daytradr, and you're using NinjaTrader CQG accounts. You can connect to that in one of the two following ways. So one is you can connect daytradr to both, you can connect daytradr and NinjaTrader to the CQG feed. Now, if you connect both platforms to your CQG feed, it is going to occur a $10 a month fee for the extra login and $5 per exchange for each of the CME exchanges, up to I think a maximum of $15. Okay, so that's one way to connect. Second way to connect is to connect NinjaTrader to CQG, and then actually connect our platform to the NinjaTrader platform. Okay, so what that will do, as you can see here, we've got a symbol search. We can actually select a separate platform and a symbol off that platform. So daytradr will then use the data from NinjaTrader, and it will also pass trade information to and from the NinjaTrader platform. Now, you can also use the platform as a bridge to data feeds we don't support. So right now we don't support interactive brokers, we don't support TD Ameritrade. So for instance, you could connect daytradr to IQ feed and have daytradr showing IQ feed data, and at the same time you could have trades going to interactive brokers through Ninja as a bridge. Now, as we go on with daytradr, we'll add more platforms and more feeds on demand, and the old plugin version for the platforms is going to disappear, and we'll just have one version of the tools for everybody. Now, the platform itself is actually very simple. It's split into 5 accessories, so 1, 2, 3, 4, 5, and then 3 order flow tools. Now, the first accessory is Connection Manager, and that's where you set up connections, and it's also where you download instruments. Now, Jigsaw, what we decided to do is we decided we didn't want to have an instrument setup. We decided we didn't want to have a rollover process. So with this application, you get to see all expiries of all instruments in the product. But what you do have to do is you have to tell daytradr which instruments you're interested in, and it'll then pull the instrument definitions from the server. So it knows that different data providers have different ways to describe instruments, and it'll map those definitions between them. So if you want to use CQG data for Euro futures, but you want your trades being placed to Rhythmic, it'll actually automatically create mappings from CQG to Rhythmic symbols. Now, if you look at the exchanges that we support all of these exchanges. If the exchange adds a new instrument or a new expiry, it will actually be added automatically in here. Okay, we don't actually have to do anything. It'll also automatically become part of the download. The strategy manager is the next thing, and this is where we define exit strategy. So in this case, we have a simple 4-tick stop and target, with the stop here being a volume-based stop. And note that volume stops are server-side. So that's just basically a stop order that gets triggered based on the volume. You can decide that they are server-side or client-side. The only reason you decide to keep them client-side is if you don't like the CQG rules for server stops. So the rules for CQG server stops are very specific to CQG. They are in the manual, won't be everybody's cup of tea. If we move on to the alerts window, this is where you see order flow alerts for common order flow events such as iceberg orders, and they're also going to be appearing on the Vista chart in the next few weeks. Session manager is where you set up session profiles for the market start and end times. Mostly that's just because it needs that to build volume profiles and figure out day high-low prices. And then P&L monitor shows you order, position, and account details. Now that is fairly self-explanatory. There's filtering and sorting available on each column. You can make that sort and filter criteria as complicated as you want to. I'm sure most people won't want to do that. So what you can see here, I can see closed P&L, I can see open P&L. If a position is open, I'll also see the most recent prices. And at the bottom, you can see the total P&L, and that's the total per currency balance. Now you can change the currency display at the bottom so you can see the balances for each individual currency, and that balance will reflect just the information you've actually got filtered and searched for here. Now you can click the plus sign here, that will actually show you the fills, and you can also view orders and accounts. Now when you're viewing these things, you might decide you might have 10 positions on. I can't tell how everybody trades. Some people just have one position, some people have a lot of positions on. What you can do from the position monitor, you can actually launch the tools, DOM or tapes, right over here on the orders tab. So you can monitor lots of positions from the screen and then just click on a position if you need to go and manage that trade. And of course you can also edit or cancel orders from the orders tabs too. Now with Jigsaw, we have a slightly different way of defining workspaces to most platforms. So the workspaces are listed here, and the workspace in bold is the active workspace. So any new window I open at the moment is going to belong to this workspace called Pete, and the checkbox tells us if the workspace is visible or not. So you can have multiple workspaces visible at the same time, and there's no restriction on where the windows go. So even if you think about you've got one of your displays, you can have windows from many different workspaces on one of your displays. Now the application is skinned, so you can change the color schemes by changing one of the many skins that come with the application. I prefer this kind of dark appearance, but if you really want to, you can have pink hearts on the screen if you want to. That's not because we put the pink hearts on there, it's just that's part of the framework. Couldn't really think of a reason to take it off. Not sure anybody were really using hearts there. Now what you can also see, we also have, oh sorry, skip that, sorry. Right, next one is templates. Now all of the windows have templates available. So if you've got any tool in Jigsaw, there's always this thing at the bottom called a template. And what that's for is to allow you to save window settings so you can reuse them again later on. Now that's obviously kind of common sense. You can also replace the default template that comes with the product so your settings are used when you first open a window. Now all of this stuff you see in the workspaces, the session templates, the exit strategies, the window templates, they're all just stored in these simple XML files on your PC in your My Documents folder. So that means if you're using the product on one PC, you can just copy this stuff across to another PC. If you've got a kind of cute or a really nice set of colors you've got in the depth and sales or something, you can actually transfer them to another user as well and share them with another user. So that's pretty much it in terms of like the supporting utilities we have with the application. But now get on to the meat and potato, which is the actual trading tools themselves. Now we already mentioned that most prop traders are primarily using the depth of market to enter their positions. Okay, now those entries are mostly taken based on the size of trades being executed and the pace of the market, and this is where a lot of traders have issues, okay? So they don't want to believe that this is true, okay? Because as humans, we absolutely love predictability. We love being in control. And the idea that you have to tune into something to get into the ebb and flow of a market, to truly understand who's in control, to many people, it just feels wrong. So a lot of people will look at this approach and they'll make a snap decision, look at the numbers on there, and they'll decide this is difficult. I have people say it looks a bit difficult. And this is often the same people that have spent 5, 10, sometimes 20 years trying to make a profit reading charts and really not getting anywhere. Now, there's plenty of people out there selling easy ways to trade, and we've all bought them in the past, and we all know that they don't work. So I tend to ask traders who look at this and kind of get scared is, you know, if you've been doing this 5 years and you're not profitable yet, and you think this is the difficult way to trade, the question I ask is, what is easy about what you're doing now? Okay, so if you're doing something now and it seems easy, but it's not working, and you've been doing it for 5 years, I would suggest that that's probably not the easy way to trade. So for now, just ask, for the next hour, just ask that you go with the idea that trading off the dome, primarily by the size and speeds of trades hitting the market, is actually the easy way to trade, okay? So if you think about it, prop firms use this approach. This is what they teach their interns. They're not going to teach that approach to make it harder for their interns, right? So they do it because it's the fastest way to get to profit. After all, any intern trader is just a cost to a prop firm until they're turning a profit. So if it really was easier to trade off candlestick charts, trading outright futures, the prop firms would absolutely be doing that. Okay, no question about that. They aren't trying to be clever. They're not trying to be smart. They're not trying to make it harder for themselves. They're just doing what gets them to profit fastest. And the way I like to think about this is similar to riding a bicycle. It's like riding a motorbike or driving a car that has gears. You change from one gear to the next based on a whole number of factors, none of which you're constantly thinking about when you do it. It's kind of done by feel. So when you're in a car driving a stick shift, you just know when it's time to change gear. It kind of becomes second nature. And not only that, but you can actually jump into a completely new car, different engine size, and within a couple of minutes, you know how to do it there too. Now, it is really done on speed, incline of the road, weight of the vehicle, number of people in the car, but those things are not on your mind when you do it. It's just the car feels like it needs a gear change, and that's exactly what happens with the market. Now, saying that, this sort of training off the dome, it does require certain, I'd say, short-term memory skills that some have and others don't. So to say there's no room for improvement with this style of trading, you know, that you've got to use the DOM that the prop firms use and anything else is just making it less pure, that's obviously nonsense, right? So there's always room for improvement, but it's still important to try and keep things simple, and most of all, still keep it true to what it is that prop trades are looking for when they're trading off the dome. Now, what we can see here, we've got 4 windows, and I'm just going to take you through what's on the columns on some of these. So the first one here is the depth and sales, and that's the Jigsaw dome. And you can see from left to right, we have this column called the trade column, which shows your orders here and P&L if you're in a position. We've got the alerts column, which is just a place to put notes, comments, any text you need. We have a volume profile, which many people know. That's just the intraday volume profile. The purple color is showing the value area. The pink is the point of control, orange for VWAP. And the white area is just showing what's currently trading right now at 52.01. We can see we've got the price here. Let me just change the pointer options. Okay, we can see, oh, it's disappeared right there. I think I just made it invisible. Visible, yeah, okay. So we've got the price here with the current position, average price located, and direction highlighted by color. We've got the bids here and the offers here. And then inside here, we have something called current trades, which shows what's trading into the bid and offer this time round. Then over here, we have something called auction vista charts. Very similar information, but this time showing historical. So we have time along the bottom. We have the orange bars here, which is just showing us where we've traded. Above us are the offers here, with white being the largest offers. Below the bids, with white being the largest bids. And then we have the circles that represent abnormal trading at a price. So abnormal size trading at a price. So as long as you stay at a price, it'll accumulate how much you trade. Once you leave the price, it'll stop accumulating. And it's just showing us where we get a lot of size traded. It's colored red and blue to show the proportion of buying and selling. Below that, we have a cumulative delta chart, which shows the running total of buyers versus sellers. Then we have the volume. So that's a total volume there. We have the buy quantity in blue and the sell quantity in red. And then finally, we have a visual representation of the market depth, which in this case is just set to the first 5 levels. Now, one thing you'll notice here is there's not many settings, okay? So the whole point of any trading tool is to give you information to make a decision. Now, what you're going to see on all retail platforms is they have thousands of settings. You have all these indicators and all these settings. You could literally spend a lifetime playing with those settings. So the moment a trading tool depends on you, the trader, having to choose the right settings, is the moment the tools provider stop taking responsibility for what appears on the screen. Okay, so we think that if you have a tool that can help you read the market, it should work pretty much out of the box on any market. So this is 2017. Software should be smart enough to do that. And with the Vista chart here, there's just 2 settings that you have to make. The first is the interval, and this is in seconds. And I have a lot of people asking me, I used to use 900 tick charts a lot, and people say, why 900 ticks? What's special about 900 ticks? You know, wouldn't 943 be better? And the simple answer is there aren't any magic intervals, okay? There's just where have we been and where did we react? So the time frame, in my opinion, is simply set to show you enough history to make a decision. Now, some people want to look 5 minutes back, some people a few hours back. For me, I switch to a higher time frame as the day progresses, because what I'm interested in personally is what's happened since the market opened. Okay, I don't really care what time frame it is. Now, the other thing we can change is this thing called the circle tuner. The circles themselves are created automatically, but more volatile markets create more circles because there's a larger disparity between what's trading normally and then what's trading large size. So for thicker markets, we use a default setting of 2. For thinner markets like crude and DAX, it's best to set to 3 or 4. The observant amongst you will note that I'm using crude here with a setting of 2, and that's simply because this is the overnight session, so this is around about midnight Eastern time, so crude's far less volatile at this point in time. So what exactly is the story here? And this is really like reading a story, and it's a story of speculators getting stuck and the market rolling over as speculators see opportunity in the opposite direction, because most of the time the markets we trade are driven by short-term speculation. Now, we do get one-way days driven by fundamentals. We do get kind of shock news from time to time. We do get economic announcements, and we do have fundamental things driving the market, but it's just not the norm. Okay, so it's speculation. It's fairly short-term, and just like all of you in this room, they don't really care which way the market's going. Okay, so people participating in this don't really care if it's going up or down, as long as they can make a profit. And that's why the markets swing up and down so much intraday. You know, we've got opportunities on both sides. You know, it's not major fundamental repositioning throughout the day. It's just people, I don't like to use the word gambling, but that's effectively what it is. So we know with speculators ourselves that speculators will switch sides very quickly if they see profit in the other direction. And what these tools do is they keep you on the right side of that switching throughout the day. So on this screenshot here, the obvious elephant in the room is these 626 bids here at 51.97, which I can see here on the depth and sales, and I can see it here on the heat map. Now that, even for the day session on crude, that is massive, and overnight, you know, well, obviously doubly so. But that alone here is absolutely not a reason to buy. Now, a few years ago, when we first saw these heat maps come out, you know, you might remember there was a lot of kind of experts telling traders to oh, you see this high depth, you're going to buy the market, right? And that was really unfortunate, because if you ask any prop trader what would happen if you did that, they'd tell you it's a good way to lose money. So these large bids, large offers are basically a heads up and nothing more than that. Most of the time they're going to be pulled, but even if they aren't pulled, it doesn't mean, you know, like in this case here, the market's not going to move down, okay? It doesn't mean the market's going to hold. So we could move down here to 51.97. We could trade that 626 contracts and then just trade some more and carry on down. So often when big bids and offers appear, it's just a legitimate hedge. In this case, it probably was just somebody who wanted to get filled on that. The bid was there for 5 hours or more even, and as we moved away and moved back towards it. Could just be a legitimate hedger who has a large position to fill and he thinks somebody's going to come and hit him. Okay, but it's not somebody who's going to hold the market. It's not somebody who's going to absorb a bunch of buying and then drive the market up, absorb a bunch of selling and then drive the market up against those sellers. So even if this is real, doesn't mean the market's going to hold. Now, there are specific cases where you can put an order in ahead of these guys. A little bit beyond the scope of this webinar to go over that. But for now, don't fall into the trap of believing that this depth gives you some sort of kind of single rule trading strategy, because that's what it is. It's like saying, oh, forget everything else. Don't worry about the market. Don't worry about the fundamentals. Don't worry about the order flow. Don't worry about this. Don't worry about that. Just see large bids and buy it. It's kind of like, it would be fantastic if it was true, but it's not. Okay, so don't get kind of dragged into that. Now, what does turn the market around quite often, not every turnaround, is stuck traders who get stopped out, you know, leading to the other speculators to think, you know, well, maybe the money's just in the market moving the other way now. So what we can see here is two circles showing an abnormal amount of trading at a couple of prices. We can see it here. We can see it down here in the volume 2. Now, we do have these high bids below. And then we have a lot of selling. This selling here that didn't result in price moving down. Those sellers are potentially stuck. Now, I say potentially stuck, not definitely stuck. What we need now is for the market to move up and for some of the traders there to get out of the way. And that is where we need to focus over here on the dome. Okay, so you've got two choices when it comes to entering in a scenario like this. You can wait for the market to actually start to move up above those circles, because once that happens, the probability of a move up increases massively. Or you can focus on the dome and watch the pace of trades as it moves up, as it trades around where these circles are, and use that kind of feel of the market to see if it's about to run the level. Now, in this case, it was actually a slow time of day. And in a slow market, you've got a lot more time to get out of the way. So, you know, for the entry here, you know, it was more about just seeing an uptick. And, you know, knowing that the speed of the market, the fact the market's so slow overnight, in itself reduces risk. So if the market actually moves against me, I'm probably going to have some time to get out of the way, make a decision. Now, you can see that the current trades here have been reset. This meter up here also showing the buy and sell quantity has been reset. That's because the moment I got filled, it will automatically reset that information just to let me gauge whether from that point forward the buyers have been on my side or the sellers are against me since I entered. Just very, very simple stuff, not very complicated, just some kind of key indicators that are going to help me make fairly simple decisions. Now, in this scenario, what happened is we moved up 4 ticks and we're now back at the entry price. Now, should we scratch the trade? Does that mean the trade's failing? Well, we can see that we had 114 sells versus 147 buys since we entered. Not a lot of trade, but then this is overnight. And what that's telling me is there's just no strong order flow against me. Buyers are slightly dominant in terms of size, but there's really no need to scratch a trade at this point in time. Now, while we do have a lot of information on this screen, what we're not trying to do is read all of it all of the time. So this meter up here is something that only actually comes to life for me when I'm in a trade. Otherwise, it's just not of interest to me. You know, almost all of the elements I'm using on here, I'm using to refine the entry and also manage the early part of the trade. So if I can get on side a decent number of ticks, then I just kind of let the trade run. I'm not really interested. I just let it do its own thing. Now the stop I've got here is at 51.97 where the bids are. Now that might seem a little bit silly if it's a regular stop order. After all, surely it would be better to have the stop one tick below that. And I would say yes if that was a regular stop. But in this case, we've got this V50 here, and that indicates what we've got here is a volume stop. And this stop will only fire if the quantity of bids at this price gets to 50 or lower at that level. So what we'll do is, while we've got 645 there, we're quite happy to stay in the trade. If we come down and trade into it, and it comes down to 5, 4, 3, 2, 1, we'll stay in the trade. The moment it hits 50, we'll get out of the trade. So very, very nice way to manage a trade if you've got some big depth below you. And then we moved on. Now what we can see here, as we moved up here, there's a number of areas we also had these large trade circles area where it actually took an abnormal amount of buying to actually move up through prices. Now the rule of thumb with these circles, just like reading a footprint chart, is not to panic when you see this. So price has to actually move against these traders in here for them to get stocked out. And you're always going to see, you're never going to see like a regular amount of trade at each price as you move up. There's always going to be disparity. There might be a hedger, there might be a calendar spreader bidding, you know, on the offers as we move up. It doesn't really mean anything until these traders get stopped out. So, you know, when you see this, yeah, you have to pay attention. You know, when I saw this at this point, yeah, of course I'm paying attention because I'm so close to my entry price. But when I'm seeing this here, really not worried about it. Because what you need to see when you see these circles, you need to see some aggression on the other side. So in this case, yeah, I've got a potential buyer trap here, but unless I see some aggression on the seller side, really not gonna worry about it at all. Okay, so as we said, the depth is a heads up. The volume at price is a potential stopping point, but it's a move against that volume of price or aggression against that volume of price. That is really when we get the potential for a turn in the market. Now, of course, you don't need to trade turns all the time either. So in a slow market like this, there are fewer momentum moves. So if you've been trading in the ES in the past month, you'll know there's very few momentum moves happening in the ES. And it's a market where you really do have to try and fade extremes, okay? In this case, you know, we can see based on the current trades here, you can see there's clear upside momentum. So you can see the kind of size that's traded into the bids. Very little is traded into the offers as we moved up. You can also see on the meter, there's 1,200 buys versus 750 sells. It's actually easier to trade momentum after a turn than trying to trade the turn itself. And that's especially true in a faster market. So what we'll do, we'll move from crude overnight to crude a bit more like most of you will know it, which is crude at roughly 9:40 Eastern yesterday. And obviously we know crude is a very fast market, and people often ask me, you know, is tape reading, you know, can it be used on faster markets? Absolutely, it can be used on faster markets. We just have to kind of treat it a little bit differently. The way I look at it, it's like you know, like the ES would be somebody running, and you've got to kind of watch somebody run and watch them turn around. Crude would be like watch somebody ice skating. It's just going to be a little bit more slippery. The turns are going to be wider, happen over a series of prices. So this is 9:40 Eastern. The tape on the right here is just showing trades more than 10 contracts, and just for the last 3 minutes. Now it's just for the last 3 minutes for me because I want to glance across there. I don't actually want to see the time. And again, it's down to that kind of letting it happen automatically. So I don't want to see the time. I want to be able to glance across there and know that what I'm seeing is recent. So I cut the time off. I just show the last 3 minutes. I can see it. All I'm looking at is the color, right? I'm not looking at the individual numbers. I'm not going to try and add the numbers up to see, you know, if the buyers or sellers are dominant. If it's mostly one color, then that's what I need to know. That's really what I need to see. Now, there might be times where I kind of look at it a bit more closely, but mostly I just want to know, what's the main color on there. So we can see sellers are dominant. We can also see that in the current trades. We've obviously come down. We can see we come down the chart. If you look at the size here on the current trade, it's got a lot more size on the sell side than the buy side. Okay, so we've had a nice momentum move. We can actually see the momentum move in the chart as well. And of course, we'd have seen it in the speed at which the market moved down if we're looking at the dome. Now, obviously, when I'm showing you screenshots, it's very difficult to gauge speed, but we've actually seen that in the speed on the way down. There's a lot of different setups we could go through, but we haven't got all day. So I want to just stick with a couple of setups that kind of explain what the tools are doing. Now in this case, we have something very common, happens on Crude a few times a day, which is kind of a volume blow off, or a situation where the market runs rapidly in one direction and lots of people get on board in that direction, so many so that it kind of becomes inevitable that the market's going to reverse. And I say inevitable because if you think about it, all the sellers on the way down, they are not really sellers, okay? They're future buyers. So anybody that sold this market on the way down is going to have to buy to unwind their position. So what happens on the way down is not only do you run out of people that are willing to sell at these lower prices, it doesn't take much for those that have already sold to think, well, this looks like this movie's over now, and that leads to them buying to cover their shorts. And that's just a process that repeats itself over and over again. Now over here, we can see the market previously moved down, actually moved down to an area of high bids, traded some size, and the market moved up against that size. We got to that area again, and that time it did kind of stick for a little bit, but it traded through it, and then we had another breakdown. And now it's moved again. We've got this size here. So what is it we want to see? Well, we want to see the market show signs that it's going to move against the people that sold in this area here. So the kind of the most recent or the closest high volume area, okay? So that these traders in here, this kind of bulk of speculators here, start unwinding their positions, and that's when we're going to get sellers stopping out, and that's when we're going to start to see some acceleration to the upside. Now, as you can see here, we did actually pop up through these positions. So we got to this area, we've popped up through those positions, and now we switched to buyers being dominant on the tape. And again, just a glance across will tell you that. Now, funny thing is here, I actually had the tape looking at the December contract, but the DOM on the chart on the November contract, but it doesn't matter because it's the same thing effectively. So the entry here is when the market pulled back to that high volume area. Now that was luck, it was not judgment. So when this market broke out here, it kind of did so before I had time to react, and it just happened to come back to that area, and that's where I got in. So that wasn't right. That wasn't me saying, well, it's broken now, I've got to wait for it to come back and get the perfect price. I'll be quite happy to get in anywhere. Once this is broken, be quite happy to get in with some momentum, but I'm not always bang on the ball, not that fast. Okay, so I got in when the market pulled back to the high volume area. As I say, bit of luck, a bit of judgment. Would have been more than happy to get in higher up as long as there was upside momentum. Now, as it is, this kind of trade here, when you're seeing people get wiped out, it's not a guaranteed trade, okay? It's not a guaranteed trade. But most likely, some of these sellers here have been stopped out already. If you look at the volume profile, we can see 492 contracts traded at 51.87. So, in my opinion, if it gets a few ticks below that, the trade's going to be over, as it's going to mean the sellers are back in control again, and we'll probably have another push down. So while this isn't like a guaranteed trade, we have a decent and fairly logical and fairly close backstop for the trade, a place where we know we can get out. So what we have is a good risk-reward entry scenario, even if we don't have an absolute guarantee of being profitable. Okay, and this is where we went. So we can see this is as high as we got before the market rolled over again. So we actually got up to 52.09, and then the market's pretty much done. Now I think that trading is a little bit of luck, and a decent amount of good judgment. So you can judge where to get into the market with low risk. You've got a lot less control of where the market's going to end up. So, you might have a good entry. It might be 5 ticks, it might be 100 ticks. In this case, market moved 20 ticks on a trade based on not really much more than understanding how speculators trade, because that's easy to do because you are a speculator yourself, and seeing the market getting a little overextended, and just having that kind of backstop, having this backstop to trade against. So basically what we're seeing is with the tools, they're still sticking with the concepts used by prop traders. Now the depth and sales is the closest tool to the ones that most prop traders use, and this is where we tell people to start when they actually first start using the tools. Now of course a lot of people are drawn to these more visual vista charts, but learning to read the DOM on its own is going to give you a baseline of knowledge that is going to absolutely give you an advantage. Okay, it's going to give you a connection to the market that you need to get on and make the most of the rest of the tools, which are basically different views of the same information. Now, you don't actually need to use all of these tools. So my kind of rule of thumb that I use is if you can't fit the information into one display, then that is too much information to trade off that one instrument. So, if you're trading crude in the ES, for me, crude could be on one screen, ES on the other. If I need the information for the ES to be on 4 different screens, then it's overload. And what you have to do is you have to say, well, I need to cut something out. So for instance, I quite like footprint charts, but I don't see the need to include footprint charts on here because I like a lot of things, but I just can't use them all, can't process them all. Okay, so what I use Vista for the history. I use depth and sales for the short-term entry confirmation, managing the early part of the trade. Reconte, just to occasionally glance across, see which side has got the larger traders on. And then the meters just for managing trade once I get in. Now, if you look at a market like the S&P 500, I do have a slightly different view. One of the things about the S&P, it's a market where there's a lot of good correlations. So I show the Dow, NASDAQ, because the way that these 3 instruments move together gives you a good indication of the opportunities that any trades are going to follow through. So if you find the Dow going up and the NASDAQ going down, or just kind of wavering around, you can not guarantee, but you're fairly sure that the S&P is going to be moving sideways, right, or directionless, and that if you get in a trade, it's not going to move 20 points. So that in itself is more than enough information to trade the S&P, and the S&P can only actually do one of 2 things, and that's go up or down. So what we're trying to do is get a feel for the market and not really make a science project out of it. So what we've got here, we've got tools. They just give us an opportunity to make a more educated decision. But we do need to step back from time to time and figure out exactly what is working for us and what isn't, okay? A lot of people ignore this. A lot of people, all they do is they look at P&L at the end of the month. And if the P&L's up, then they're quite happy. And if the P&L's not up, they might actually wipe it out and start again. So what we have for trade statistics is something called the peak performance dashboard. And that's where you analyze the results of your trading. Now you access this from the members page of the Jigsaw site. And what happens is as you trade, the daytradr platform is going to be sending the results of your trading to the dashboard across a secure connection. So where we start off with this, we start off with selecting a date range to analyze, and optionally a date range to compare to. Now by default, the comparison is going to be with the previous period of the same duration. So if you choose the last 2 weeks, the default comparison will be with the 2 weeks before that. So what you can do, you can look at time periods, and you can also do some kind of what if analysis by filtering for specific accounts and instruments. So the P&L section here shows the running P&L for the period, and each period starts at 0. Now in this window, the green line is the current period from select on the left, and the pink one is the previous period. And with this dashboard, you can move the cursor over any graphic and actually see the exact numbers. So we can see here at this particular date on 13th of October, the running P&L was 11,500 and the previous was 9,700 roughly. The trade distribution here shows which times of day you traded most frequently and which times of day you made money. Now, as you can see on this chart, the user had a net gain for almost all the periods they traded, but at 3 a.m. and lunchtime, they made a net loss. Now, I don't know what the 3 a.m. was all about, but that's an outlier because there were so few trades. But the lunchtime trading probably is a cause for concern, and it may be worth them reviewing the strategy at that time, or just actually taking a break. Now, we can also see on trade distribution by day of week that Thursday was the most profitable day, but Tuesday was the day that they traded most actively, and that actually didn't pay off so well. Now, just bear in mind that what we're looking at here is just a few weeks of data, and it would make sense to do this sort of analysis over a long period, before making any judgments based on the day of the week. Now, in terms of instruments, we can see here for the current period, most of the gains were made on the bund. And what's interesting is that most of the gains were made on the bund, but the ZN accounts for almost half of the losses, but only about 20% of the gains. Now, as these two here, the bund and the 10-year, are the instruments with the most trades, what we can do is say, well, that's kind of maybe hiding some of the detail on the instruments we've traded less. So what we can do, we can actually filter those instruments out and then just see how we did on the remaining instruments, okay? And obviously that picture changes when we take out the 10-year and the bund. So what we can see is, for instance, that the crude trading here seems to be less efficient than some of the other instruments. And we can also see that the Euro stocks here, the FESX, it's on the losses side, but it's not on the win side. We've got 0 wins on the FESX. So what we can do, we can actually zoom in and see how we did on the FESX. And here's the stats for the Euro stocks. Not really looking ideal, but remember that we've got this date range here. It's only 2 weeks. So what we should do, probably look at that over a slightly longer period. And we can see overall, Euro stocks trading really doesn't seem to be paying off for this trader. Statistically speaking, it's not that many trades. It's not, but if we remember, the P&L for the 2 weeks was 11,000. This is going back a bit further. It's still $1,000, right? If you think about the other instruments this trader was trading and the volatility profile of those instruments, so the 10-year, he traded quite well, but he was trading also a lot of instruments that were more volatile than Euro stocks. He's not showing profit on one of the least volatile instruments he's trading. So it's likely the trader just isn't suited to trading that sort of instrument. That might be suited to more volatile markets. And it might be worth considering just dropping the FESX. Now, as well as the charts, we also have statistics. Most of these statistics again, these are going to be reflected by the current filtering and date ranges we have selected. So, we can exclude dates, we can exclude accounts, we can exclude instruments to see how the results would have been impacted. So this dashboard allows you to slice and dice your trading data to unearth patterns in the trade history that you perhaps wouldn't notice in the heat of the moment. And that really is an essential tool, because at the time you're trading, you are never going to notice those patterns, right? You're just kind of in the heat of the moment, doing what you do. It's just impossible to see that stuff. So, we recommend doing this sort of trade analysis, at least once a month, just to help you fine tune your trading and kind of help you just stick with what works and avoid what doesn't. The next thing we'll take a look at is the environment. So we already discussed that being around traders is a huge benefit to those people in the prop environment. And the Jigsaw chat room here is our way of kind of giving you that benefit. Now, this is not a copy my trades room. This is purely to chat about trading and the markets in general. So you can chat publicly here, and individual users can also break out. They can have private chats, text chats, audio chats, video chats. Now, the room itself is most active during the US morning chat session. So we do discuss trades, obviously, because this is a room that traders attend. My advice if you join this is to not discuss every trade you take. So if you put yourself under the pressure of announcing every entry and exit, what you'll find is that you become too concerned about the other people in the room, and your trading won't be so much for you anymore. It'll actually be for the room. It'll actually be for them, and it'll actually change your trading behavior. Now the traders in this room, they're all using order flow, but they're not all using the same techniques. So they're not all entering and exiting for the same reasons or on the same market. In fact, we've had occasions on here where one person will be long, someone else will be short on the same instrument at the same time, and they both ended up making money. So the key to this, it's just an exchange of ideas, of opinions. For a newer trader, it's good to see what sort of activities and events are on the mind of those with more experience. You know, you might see someone get into trade, a newer trader says, you know, why did you get in there? What was it? You know, we get that all the time. Even the more experienced traders are like, well, why that price? And then, of course, there's times where market's moving sideways and doing nothing, and discussion goes a little bit quiet. So the room overall has got a really good atmosphere, good bunch of regulars that are coming daily, and it does do a good job of replicating that kind of camaraderie you'd experience in a prop firm. There's just a lot less bad language than you'd find in a prop firm. Okay, so the last part is accountability. How can you make traders accountable? Or rather, how do you discourage people from just resetting their sim accounts over and over with like no recourse? You know, having them in a situation where they just kind of, they behave badly over and over and over again with no consequences. You know, because for a lot of people, that's what's preventing them from learning from their mistakes. They literally wipe their mistakes out so they just don't exist anymore. So what we decided is it's probably better to use a little bit of carrot more than the stick. So we created something we call the Jigsaw leaderboard. It's optional to join, and it rates traders by a consistency rating. In fact, the rating comes straight from a prop firm, and it's based on statistics that they use to decide if an intern trader can switch from trading sim to trading live. Now, as you can see here on this particular week, the top trader here made half of what the next trader made, as you will, so his win rate was lower too, which also probably sounds counterintuitive when you talk about consistency. Now, obviously, you're not going to win this, or you're not going to get to the top of this if you consistently lose. So you have to be profitable, but a prop firm is going to be looking at a lot of things. It's going to be looking at low risk, it's going to be looking at consistent wins, and a number of other metrics that point towards longevity as a trader and not having a bad day that could blow up your account. Now, this rating helps in a couple of ways. First of all, it gives you a metric besides P&L that shows if you're improving, a metric that's actually used in prop firms. Seeing other traders make money also gives you the confidence to know that it's actually possible to profit in the first place. And it gives you a goal to reach and a reason to not trade off plan. Now, what we also do, we also offer monthly prizes for the top performer on the leaderboard. So for October, there's a $500 cash prize, and looks like Mr. Gecko is definitely in the running for that. And again, it gives an incentive to perform in a certain way. So you can't win this by swinging for the fences to try and beat the most profitable. It will not work. You will be rated down for that. You have to do it by trading well over time. Now, being at the bottom of the leaderboard 1 month is probably a bit depressing, and not the next month is actually a tangible measure of improvement. The bottom line is the leaderboard does help to make you accountable for your actions without necessarily trading a live account, although many of these accounts are actually live. You know, because you can reset your sim account every time you have a silly day and nobody sees it, but it'll still damage you long term. And with the leaderboard, you can't even reset it. Okay, just doing that, having those silly days, they're going to be on the leaderboard. Once your trades are in there, there is no way to remove them. So hopefully it's going to help traders get out of that bad habit. Now, the leaderboard is optional, as is the ability to share individual trades. So there's a position button here. Let's go back. A position button here and a blue icon here that's used to link to the trade view, but obviously only if the trader has opted into that. Okay. Now, there's a number of reasons a trader might decide to keep the entries and exits themselves. But if you do opt in to show your trades, it will look like this. Now, what we don't do, we obviously don't display the account number, but we do display the account type, whether it's a demo, live, combine, etc. And we show the currency balances at the top. Now, that is not the only way you can actually share trades. So the other accountability tool is the ability to share trades with other traders. And there's a few reasons you might want to share your trades with somebody else. So primarily, this was written so that prop firms can use Jigsaw user base to search for talent. Okay. Now, I'll tell you that there's a lot of people here who say, man, I'd love to get into a prop firm. there's a lot of prop firm managers saying, man, I wish I could just find traders that can make a profit, because the recruiting process at a prop firm is fairly painless. And I know guys in prop firms, and they're always trying to kind of improve that process, because it's really hard for them to know who will and won't make it. And the cost of education for a prop firm is fairly high. For many prop firms, it's a 12-week education program, with about 25% of that being theory. And that 25% theory actually requires a body to be standing up there teaching at the time. Then it's about 75% practice, which also requires a body to kind of help the traders through that practice. After that period, the trader needs to earn his live account by sim trading, during which time, again, they're all costs. It's data fees, the room, part of the rental, equipment, they're all costs. So prop firms, of course, they want to do whatever they can to avoid the risk, or to avoid that recruitment risk, to avoid those costs. We're actually working with firms to help reduce this risk by helping them connect with promising retail traders using the platform. So once introduced, the firm can use this feature to request a share, and if that's confirmed, they're then going to have access to that trader's history, be able to query it, download it to Excel, work with that trader to see if that trader really has got what it takes. Now, the final piece of the puzzle at Jigsaw is education. And for years, people have been commenting on how good the videos were that we put out, the webinars that we did, and they were all free. Now, earlier this year, we decided that we should formalize that education part and make it available to customers only. A lot of it is still free, but it's only free to customers. So now we have 3 tiers of education. So we have beginner, which is 10 hours of videos covering the basic theory and practical application of order flow, plus drills to actually get it to stay in your head. Then we have advanced, which is 7 hours of training, which kind of covers more specialized uses of order flow. And then we have an institutional course, which is a course straight from a prop firm in London. Now, the way this works is the closer you are to profit, the less you need. So if you have a technique that works reasonably well, as in making money, but needs some refinement, you take the beginner course, which comes free with a product. The advanced course you can get at the same time, or you can just say, well, I'll get the advanced course later when I've absorbed the information from the basic course. That's over 17 hours of educational material, and because we know about the way we learn, we should all be able to appreciate that it'd be pretty pointless to try and cram that all into your head over a short period. So if you remember earlier, we talked about learning new skills and the need to make that skill automatic. That still applies, okay? Now remember how we break phone numbers up into chunks? Well, if we need to do that with a 10-digit number, can we really expect to keep 17 hours of video in our head if we cram it into a whole weekend and process it in real time and reading the markets? Absolutely not. So the recommendation is to go through the material slowly. Now you can start the drills straight away, okay, because that's kind of just practical experience, and start those at the same time you watch the other videos, and you'll get as much from the drills, the hand-on experience, as from the education material. So the job's to watch, observe, take the things that resonate with you, and then focus on applying with them. So for example, if you find that reading momentum on crude oil resonates with you, then just focus on momentum plays in the short term. Master that and add more stuff later. There is no point in learning lots of other stuff if you've got one thing you can master and start to profit from. You do that later. Don't try and cram everything into your head, because it's simply not the way we learn. Now, a lot of people came to us, or a lot of people still come to us, having spent time and not having anything that works, and they also have quite a confidence issue. So they purchase this kind of promise of profitability from many people on many occasions, and each time they paid money to an educator, it turned out to be a waste. So people are skeptical, and rightly so. But that can mean that even when they find something good, they actually put a lot of energy in, where's the catch, or where's the scam, or where's the lies. And if they look hard enough, they'll find something wrong, even if there isn't. And then they'll stop looking at that. So that's why we decided to incorporate one of the courses from Axia Futures, who are a London-based prop firm, into the product set. So the Axia course includes a lot of practical drills, a lot of theory, and they are all done with the Jigsaw tools. Now, from a customer perspective, you'll have the confidence that what you're learning is legitimate, as it comes straight from an established bricks and mortar prop firm, a firm that has a room full of traders trading live that learnt the same stuff. And you also know that the tools are institutional grade, because otherwise a trading firm wouldn't put it on their course. Now, people are always going to be skeptical to some degree, but if we can kind of remove that worry from the students' minds, then we can have them push through the learning curve, the difficult part of the learning curve, and stick with something that works instead of jumping from system to system. Now, we do have a slight advantage over Axia in terms of sale tax, so we are able to bring their course in at a competitive price point. And we also add in something called group therapy, which is kind of a light mentorship for the students that take the course with us. Now, that mentoring is not the show me where to get in variety. It's not basically training what a limit order is. It's just guidance through the process, helping you turn what you learned on the course into a strategy you can apply. So that means things like recognizing which parts resonate with you most, selecting a market or a set of markets to fit that approach, putting together a cohesive plan to take advantage of the behaviors you're seeing, then monitoring the progress as you move forward. So helping you to turn the knowledge of the methods into an execution plan. It's still going to be based on your knowledge though. It's still going to be your work, but guidance through the process. After all, you're the one that has to trade this. So there's really no point in focusing on the things that I personally find easiest for me. So I like slower markets. A lot of people right now, they like faster markets like crude, like DAX. So we want to be able to guide people through the process just so they don't hit a wall on the way. Now, what you're going to see over the coming months is you're going to see more prop firms releasing education material. Now, we're not going to name names, and we're not working with any other prop firms at the moment, but I do regularly speak to people in prop firms. So I just happen to know other firms that are right now turning their educational departments from a cost center to a profit center. And I personally think this is a great thing for the industry, because having professional firms pushing out their internal education programs is really a great thing for the new retail trade. It's going to hopefully put some of the kind of scammy education companies out of business. Because if the regulators aren't going to do it for us, then maybe capitalism finally will. It would be great for traders to have a selection of professional trading courses to choose from firms that primarily make their money trading. Now, as we said at the start, trading isn't just about where to get in and where to get out. Okay, it's a skill, and like many skills, there's lots of areas to improve, and there's lots of ways, lots of kind of different domains you can focus. So we know that new traders tend to be very one-dimensional, and there's just one question on their minds: where do I get in? Where do I get in? And in a prop firm, that's just one aspect of trading, or rather, they teach market behavior, and then they worry about how to exploit that behavior, and they have all these different things that actually contribute to trader development. For the guy sitting at home in front of the trading platform, it's a long way from being in a prop firm in terms of information, environment, expectation to perform. And that's why I've got people coming to me after 20 years of trying and failing, but prop firms are getting their guys profitable in a fraction of that time. So bringing some of that prop attitude, that prop benefit to the retail world is just one way that companies like Jigsaw can help traders move forward. Tools we have are great, the trading tools we have are great, but they are literally really are just one piece of the puzzle. And now is a good time to type in any questions you have. Prices of the package are here. This is for a lifetime license and includes the standalone daytradr application and the plugins for the various trading platforms we support. Leaderboard, chat room, analytics, they all come free as part of the package. So the price difference between these packages is simply the level of education you get with that package, from free with the independent package to institutional package with the prop firm course. Now what we're going to do as you put your questions in, for those that stay to the end, what we're going to do is we've got a slightly special offer today. Now we know that order flow analysis is not for everyone, but any trader that's been struggling for a while should take a look at it, and specifically a look at the way we do it with Jigsaw. And with that in mind, what I'd like to offer today is something special I'm just going to do for the Futures IO audience. For those traders, if you're not using order flow or you're struggling to make sense with another set of order flow tools, we're going to do a free 20-minute phone consultation where we'll go over your trading history, what's worked for you, what hasn't, and we'll give you an honest assessment of the steps you might be able to take next based on our experience of work with thousands of struggling traders. We can usually tell quite quickly if somebody's going to actually get this to work or not, or whether order flow is not for them. Now, I can't guarantee to answer every question in the call. What usually happens if I can't answer a question, I have to fall back to a colleague another professional trader that's perhaps in that area. Maybe you're trading spreads. It's not really an expertise for me. Maybe you're on DAX, market making, really not something I'm an expert in. So if you do want to take advantage of this 20-minute consultation, all you have to do is go to the Jigsaw site, jigsawtrading.com, click the little envelope here, just leave me your name, email address, either phone number or Skype ID, and the time zone, best times to call, and I'll get in touch with you and we'll set up a call. So with that, Terry, are you still awake, and do we have any questions?
Yes, give me 1 second. I'm reading through, trying to pick out the best ones. Let's see. At the beginning of the presentation, where did you get the statistics about traders?
We did that in a webinar. So what happened, I had, I can't remember, it was 2 or 3 traders email me in January and said, Pete, I've been trying to do this for 20 years and not getting anywhere. And so I did a webinar to kind of discuss, I had a chat with this guy in Australia, and we looked at what he'd done in the 20 years, and we found out what his issues were. But I never realized that. I didn't even realize that was possible or that was going on. You know, at 20 years, it was kind of a shock. So I actually did a webinar where we actually went over what this guy was going through. And it was at the start of that webinar that I asked the attendants, about 270 people, those questions, and that's where the statistics come from.
Okay. How many prop firms currently use daytradr?
Just 2 at the moment. So we've just introduced it into 2 firms, mostly because everybody wants TT feed as opposed to CQG. So we're just putting the TT feed in.
Okay. Let's see. When will daytradr support S5 or OEC?
How long is a piece of string? I've got a programmer working on it right now. We've got the level 1, the level 2. We've got the order management. We just got the startup process. It'll be in November. It'll be in November. And at that point, we'll drop the S5 plugin and we'll just have daytradr go straight to the data feed. Okay.
Does it work the other way around, connecting Ninja to RTP?
Yeah, well, once they're connected, you know, if you connect, it's like a data feed, right? When we connect daytradr to Ninja, first of all, either can be opened first. You can open Ninja then daytradr, or daytradr then Ninja, right? And then if you do a trade in Ninja, it'll appear in daytradr, and you do a trade in daytradr, it'll appear in Ninja. So it's kind of like a 2-way interface.
Okay. The new symbols are part of the download, but is there a way to change the symbols on all of the charts globally without creating a new chart?
At the moment, if you want to change the symbol, you click on a chart and click space, or you click the magnifying glass icon. But right now, there's no global replace. So there's no way to link different windows with instruments. That is something we're going to do later.
Okay. The daytradr plugin, is it available for TraderVate?
Not yet, but it is something we do, and we're doing the Ninja versions first. So we found that with NT8 we keep getting, with S5 we keep getting code breaking changes, and so that's why we're going to get rid of that version. With NT8 we're getting the same thing, that every now and again they do a release and they change a command and so we're doing the NT8 first. And then we'll roll out the others. But with TraderVate, they actually did the interface for us. So with TraderVate, all we have to do is kind of get it right with Ninja and then say, TraderVate, this is how we did it, and they'll do it for us. So I can't guarantee when they will do that. So they've kind of they've got an idea of what we're doing, but until we finish the Ninja one, I haven't really got anything to take to them to say this is the effort it will take. And then it'll be up to TraderVate to make that call.
Okay. And do you still have to have an account with NinjaTrader to use daytradr at the moment, or is there other brokers that you can use it with?
No, you can use any brokerage that supports the CQG feed. You can use any brokerage that supports the rhythmic feed, which is basically most of the brokers in the US.
Okay. Can I use NinjaTrader 7 with daytradr?
Yeah, that's a good question. So we've done NT8 first, and it's really down to, I need to have a conversation with Ninja and talk about end of life, if they're going to end of life NT7 or not. I still quite like NT7. So what we're going to do, once the NT8 version is finalized, which will be in the next week, then we're going to have a look at what the effort would be to do NT7 and talk to Ninja about end of life. If it's still got a life, if they're still going to support it for a year or two, then we'll do the NT7 version as well.
Okay. What version of daytradr were you using on the screen? Theirs looks a little different.
Yes, that's the version that will be out. It's 1105. That'll be out on Wednesday next week, roughly. It's got a few more, as you know, it's got a few more charts on it. It's got the volume on it and the depth gauge. So that'll be out next week.
Okay. Can this software be designed to see order flow in Forex?
Yeah, we're going to do MT5. We've got the MT5 integration going on. There is no order flow information in Forex, but there are some Forex providers that are kind of showing the market depth, so we can do that. You can also use, what a lot of people do is actually use the futures information to trade Forex. But yeah, we're going to have a look at how we can do a proxy for the trade volume. So it's something we're going to look at. But for now, the best thing to do if you're a Forex trader is get a futures data feed and actually watch the order flow for the futures, and then take your cues off that.
Okay. How do we create the bottommost two panels?
Okay, let me just bring that up.
Yeah.
Let me just bring I can just show you 1 second. Right, yes. Okay. There's some buttons here that control that. So when you get the release next week, you can see this is for the delta, this is the volume chart, this is the depth gauge, and then we've got the crosshairs here.
Okay. Okay, that question was answered there. What are you trading most of the time, ES or crude?
Well, I'm a big ES fan, but the ES is kind of, you'll know that after the summertime, the ES really never recovered in terms of volatility. So I'm trading crude more now than the ES, but there's not much opportunity in the ES. But I'm a big fan of the ES. So I just think at the moment when the volatility is low, there's not that much opportunity. So, for right at the moment, since Labor Day, a lot of days that there's been an opportunity fairly close to the open, and then not much for the rest of the day, which is fine, right? If you can do one trade a day. So the ES right now, it's just not great. But if the ES, when the ES kind of bounces back and becomes its old self, then I wouldn't look at crude. I wouldn't be interested. I'd rather not trade crude, to be honest.
Okay. Can I connect cryptocurrency API to your product and trade it?
Not at the moment, but again, that's something that's in the works.
Okay. Can you change the font size on the platform?
You can on the depth and sales. You can't on the charts at the moment. But again, that's something that's scheduled.
Okay. How do you switch from live to sim in daytradr?
Well, there's two things you do. You have to put the live license in first of all in the options, but basically you just change the account. So what we do at the moment, we're only doing sim. We don't have a simulator in daytradr because most of the people are using CQG demo accounts, but we do support sim with Ninja. But basically, it's just a matter of switching the account, basically.
Okay. Can let's see. Can Top Step Trader or OneUp track daytradr trades during a combine? Yes,
we're both OneUp and Top Step have Jigsaw as a supported platform. So there's no problem with that. So we'll track our leaderboard, the peak performance dashboard, the Jigsaw P&L. We'll all track the OneUp and Top Step Trader accounts, and obviously you can trade those accounts from the platform as well.
Okay. What is the cost of the platform?
It's $579.
Okay. Uh, Says I purchased Jigsaw 2 weeks ago and would like to know if there's any updates and how do we access them.
There'll be an update on Wednesday next week for the new charting components. What will happen is an email goes out to all of the users when that happens. All you have to do is just go to the members site, and there'll be a note on the members site about it, and you'll be able to download it from there.
Okay. Is the $579 for life?
It is, yes.
Okay. Is there any API interface for daytrader?
Not at the moment, and at the moment we're writing all the APIs ourselves, and I've got kind of farmed that out to a team in India. There's a lot of people have asked for APIs for automation. I'm not 100% convinced that that's the way to go for a lot of traders. I've seen that most traders that attempt automation just do nothing but spend years getting nowhere with it, and kind of rather not be a part of that side of the industry if I can help it. But it's like anything. It's just everything. A lot of the stuff we do at Jigsaw comes down to demand. If enough people ask for it, I'll do it.
Okay. Do those who bought the old Jigsaw for $3.99 get a discount for the new platform?
No, they get it for free.
Okay. Okay. And will that Ninja Jigsaw add-on ever stop working in the future?
Well, basically, what will happen is we've got the add-on right now, which is like one set of code, one set of programs, and then we've got daytradr, which is another set of code. So what we're doing is we're linking daytradr to the platforms. So for instance, once we link daytradr to NT8, the plugin for NT8 will disappear, but you'll have the same functionality because daytradr will effectively become the plugin. So it's kind of like yes and no.
Okay.
You'll still have all the functionality you have now and more.
It'll expand into daytradr and the add-ons will go away.
Yep, absolutely.
Okay. How do you find the P&P column and do not see volume graph? How to find that button?
PNP. What is the
he
PNP?
says right after he says, okay, I got it. So I don't know.
Okay. Glad we answered that.
Yeah. Let's see what. Okay, you answered that already. How different is Jigsaw depth and sales plugin different from daytradr?
It's the depth and sales plugin. All the new features are going into daytradr, right? So we're not maintaining two sets of code. Daytradr, because it's a standalone product, the performance profile is just way different. So when you plug into somebody else's product, you have to fit in with their architecture. When you have your own product, you've got your own architecture. So memory utilization, CPU utilization, stability is much higher with the daytradr platform. I mean, you'll see it's a lot faster because we're not kind of sitting on top of something else. Now, when we do the interface to the platforms, you'll still get that benefit because the interface to the platforms is going to be very thin. It's a very thin touch. When daytradr works with the platforms, it just literally pulls the data and then still relies on its architecture to do the processing. So it's really performance, memory, stability you benefit.
Okay. Can daytradr be set up to show executed trades on the auction vista portion of the screen?
Not at the moment, but that's in the pipeline. I've actually got one of the developers now working 100% on adding new features to Vista. So if you've got any ideas, then please mail them in. So you're going to see a lot of changes there over the next couple of months.
Okay, what kind of timeline for the daytradr standalone working with OEC? I think you answered that already.
November.
That's what you said, November. Yeah. Do you still rate the CQG demo in terms of realistic feels, etc.?
Absolutely.
Okay. If you start with the basic training, how much to add the extra, I guess the next levels up of training?
I think it's $349 for the advanced and $857 for the institutional.
Okay. Is it possible to put a ATM from daytradr to the alerts actions in T8?
An ATM into alerts? Well, that's a good question. I'm not sure why the ATM would relate to alerts, because for us the alerts are order flow alerts. So I think the question is, I don't know, because I don't really understand the question, but if you send me an email, I can take a look at it.
Okay. Okay, I'm going to make this last question because we're already at an hour and a half. How does your order flow product compare to others such as NOFT?
Well, basically, our stuff doesn't come with any baggage. So we just display what you need to make a decision. There's a lot of stuff out there which is basically it's retail bait, where they're giving you all the shiny stuff and telling you exactly what you want to hear. What we try and do is just say, okay, well, this is what prop firms do. You're either going to like it or you won't. Because the way to sell the most software in education is to give people what they want, right? Unfortunately, that's not what they need. I think we'll always be a niche player. So we've got everything you need to make a decision, but we don't layer on top a bunch of stuff that that make retail traders feel warm inside. So that's the biggest difference with what we do.
Okay, awesome. Thank you for the webinar today, the information, and most importantly, your time.
All right, thanks, Terry, and thanks everybody for joining us.
Absolutely. You take it easy.
Thanks.